What's up, traders? So in this particular video, I will be breaking the exact model that I use to pass my prop challenges. So it's an easy and repeatable system, and if you find it fit, then you can be able to also do the same on your side as in your trading journey. Now, the first thing that you need to understand is that you need to have a clear understanding of the market structure. So you need to know when the market is in an uptrend or when the market is in a downtrend. Now, a simple understanding of market structure is that if the market is making higher highs and higher lows, then it means that the market is clearly in a bullish structure. So in this particular case, you want to be a buyer in that particular market. And if the market is making lower lows and lower highs, then the market is in a downtrend, and you don't want to be a buyer in this particular case. You just want to short the market. Now, again, number two is that you need to pick your a very good and high quality point of interest. In this particular case, in my case, I'm always trading the demand and supply. So once the market comes to demand levels, I want to look for buys. And once the market comes to the supply zones, I also want to look for sells. So the demand and supply zone are my point of interest. Now, once the market comes to your POI, you want to go a step further to switch down to the lower time frame. So in this particular case, I'm looking at the structure on the 4-hour time frame. I'm also let's start even higher. I'm looking at the general trend or bias from the daily. I'm looking at the market structure from the H4 and also marking my point of interest from the same H4. And now I'm looking for my entry or confirmation from the 15 minutes time frame, which is M15. All right, so now I will also be doing I'll be breaking down this skeleton for you then so that you can be able to understand the structure itself. So this is a sketch of the model, and in this particular sketch that I have, the market is clearly in a bullish structure. So this is signified by this break of structure, which now whatever I am watching on this particular context here is the 4-hour time frame. So once I'm getting the market doing constant BOS or break of structure, then I am of the opinion that the market is in an uptrend. Now, the second thing that you want to do is you need to understand, or rather to identify your point of interest from this particular move that has happened over here, because the market will never move in a straight line. The market will always do pullbacks, and once it's doing these pullbacks, the market is always coming to your demand zone. Now, in this particular case, the market is pulling back to this 4-hour demand zone, and as the market also pulls back to the demand zone, the market is making this kind of move, because the market doesn't just do one move sure. No, it doesn't happen like that. So the market will pull down or do this corrective move in a very corrective manner, or rather in a gradual manner. Now, once the market is also approaching the POI, which is the demand zone, you will be able to know when the market is aligning with the general trend, if at all we have a model that we call the change of character. A change of character is basically a break of the last lower high. In this case, just a move like this, you breaking this last lower high. And once the market again is pulling back, I don't want to get my entry immediately at the change of character. No, I don't want to get my entry exactly here, because now one of the biggest challenge when it comes to skilled traders is how to secure trading capital in their forex trading career. Now, I want to introduce you to WeMasterTrade.com, a platform that is ready to empower you in your trading career journey. Now, with WeMasterTrade.com, you can be able to scale up your trading career with either instant or challenge accounts. And the beauty about WeMasterTrade.com is that with as low as $35, you can be able to secure an account for yourself that fits your budget. Now, using the code on this screen and using the link on the description, you can get yourself 30% exclusive to all members in my community. Go out there and secure your trading account with WeMasterTrade.com. I'll be trading more of a breakout, which is not ideal with my trading style. I want to see the market again pull back after doing this break of the change of character. Now, after doing the change of character, there are 2 points that I need to identify. That is the swing low and the swing high of the move that caused the change of character. And once I identify those 2 points, what I'll do next is pick my Fibonacci like this. So I'll pick my fib tool. So my fib tool, I'll put it on the from the lowest, the highest point that caused the change of character, and I'll be waiting an entry at the 50% of that particular fib zone. So or rather at of that swing high and low. So my stop loss will also be just below this low over here. So the lowest point for that caused the change of character, that's where my stop loss will be. My take profit will be at the next key level. In this particular case, this is the highest point that I want to see the market taking out. So that will be my take profit. So in most cases, this will be either a 1:2 to 1:3 risk reward ratio move. And that's the simple model. Now, the same case applies to a sell setup. I believe once you have an understanding of the bullish context, or rather move, then you can also be able to replicate the same in a bearish price context. Now, I want to give an example with 5 setups that have been trading for the month of July, just to see how the same model has been applied in those trade setups. Now, I'll start with my most recent trade setup. So this is GBP USD, and I just took that screenshot so that I can be able to to annotate the chart. Now, the market is coming to this demand zone over here, and as you can see, the market, once the market approached this level, we had this push high. This is the last break of structure going down. The market pushed down again, and now we had the market breaking the doing the change of character. So if we jump down to the M15, it will be a little bit more clear. So, but this is the move down, move up, move down, move up. So the change of character is happening here. And once I see this, then I will always pick my fib from this point here to this point here. Therefore means that the 50% is around here. So that is my entry, and my stop loss will just be below the swing that caused the change of character. So this is the swing low of the change of character. This is the lowest point. That's where my stop loss will be 1 or 2 pips below. And of course, I want to look at the highest point where the market was coming from when it was doing this move. That is where my take profit will be. So that was a good move for GBP/USD, and this was a 1:3 risk reward ratio trade. This is actually the last trade of my most recently passed prop challenge. Now let's look at another Let's look at another chart. In this particular case, this is a CAD JPY trade setup. Now, this is another trade setup. Now, in this particular case, we don't have the market pulling back to the demand zone. Instead, this was a 50% retracement move because CAD JPY has been in a long-term bullish context. Now, once the market comes to that POI, this is our POI over here. Now, the market, you will see the market is making lower highs and lower lows because this is, the market is doing this in a gradual move. And once we have the break of the last lower high, for instance, this is a buy setup. Therefore, once we have this break over here, then you are waiting for the market. You'll pull in your fib from this point low to this point high because that is the move that caused the change of character. And you always want to place your pending order at the at the 50% stop loss just below the swing low that caused the change of character, that is below here, and take profit on this swing high over here. So that was a simple 1:2 risk reward ratio trade, which was also a win. Now, another trade, let's break down this BTC USD setup. Now, the market in this particular case was making lower highs and lower lows. Now, what happens to the market? The market pulls back to this supply zone that you can see marked over here. And once we see the market pulling back to the supply zone, we switch down to the lower time frame. In this particular case, in most cases is M15, but this chart is taken a screenshot of the one.
Have you had all the forex hype online, flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
1 hour, but still, if you go to the M15, you'll find that this was a clear break of structure going up, and this was the swing low of the M15, and you want to see the market breaking this last a higher low. That is what we call the change of character. Sorry, this should be the change of character, not as shown on the chart. So this should be the change of character. And once the market does that change of character, you can see my fib was pulled from this highest point here to this lowest point here, and the market pulled back very nicely, exactly to the 0.5 or rather to the 50% fib zone. So that will always where I'll be placing my pending order. That is in this particular case, it is a sell limit, and my stop loss will always be above. Now, in this case, is above the swing point that caused the change of character. So my stop loss is above here, and of course I want to take my profit down here. So this was another win trade of 1:2 risk reward ratio. Of course, I can extend it a little bit down, but in most cases my setups will always be 1:2 risk reward ratio. Now let's analyze another setup, which is USD CAD. Now USD CAD, from the higher time frame context, the market is coming to this demand zone over here, and if you go down to the entry time frame, you'll find that the market was coming down, and this was more of a sweep. So this was the last move, And then we had the market doing a displacement over here. This is the change of character, yes. So with this move, once the market did that, you can see there's a one single candle setup that came to test what, the 0.5. So that is my entry point, my stop loss just below here, my take profit based on the next key level, or also you can just set it to 1:2 risk reward ratio. Now let's also break down this GBP USD. So that was also a winning trade. Now GBP USD, you can see the market doing the change of character here. So the market returning back to tag me in at the 0.5%. This was a sell setup. Of course, the sell limit over here, stop loss just above the swing high that caused the change of character. And the market started moving in my favor before reversing back to take me out on break even. So this shows that not all trades that you use the same model will always be a winner. So in this particular case, this was a break even trade on GBP USD. So now again, another setup, which is what, CAD JPY. So the market was coming to an area of interest, or POI. Now the market, this was the last break of structure going up. Therefore, it means that once the market broke this low, this was the change of character. And once we have that change of character, I pull my fib from this high to this low, the move that caused the change of character, and I'm always placing my pending order and the 0.5% of the fib of the swing high low that caused the change of character. So my entry was here, stop loss just above here, and the take profit just below here, down here. So this was a 1:2 risk reward ratio trade. But as you can see, this was not a winning trade. So this was a losing trade. Yeah, just to also show you that you will not have all trades going your way. You will have a couple of trades, which are winners, and also other trades which are losers. And also, if you do probably the break-even model, you'll also have some break-even trades. So what I'm just taught you is not just a holy grail system. This shows that but if you are able to repeat the same model over a period of time, because trading is a game of probabilities. So let's say out of 30 trades, using the same setup, using the same entry model, even if you are able to win 50% of the trades, this is great, because you will always have a positive expectancy in the outcome of your trades. So I hope you learned something out of this video, and if you like this trading strategy, please let me know down on the comment box. It's very easy to implement. At the same time, each and every day in the market, you will never miss this setup. Each and every day, I'm spotting setups using the same model, and I never look at anything else. This is my signature model, and I've used it to pass so many prop challenges, and I hope that you can be able to implement it in your trading. So thank you so much, guys. Make sure to subscribe, and see you on the next one. Bye bye.